Last month, I think I was unintentionally very negative about the market, and it has been creeping up. So I didn't mean to be that negative about it. I'm actually somewhat positive. We're somewhat invested. I'm not really afraid of anything too bad just yet. There are some seasonality factors we're thinking about, but beyond that, I'm trying to keep it positive and light. Will be on later to change that. First of all, thanks. Huge thanks to Dave Keller on Stock Charts TV, who had me on the final bar yesterday on a special episode. Super fun. Although I realized I admitted probably the most important part about the name exposure index is that Will Hepburn, our very own Will Hepburn, is the one who created it. So sorry about that, Will. I'll make it up to you at some point. So definitely check that out. It was a really good interview about that. And a couple of the charts that we talked about on this interview, I'm going to show it here and talk a little more in depth about how they went. So our typical monthly stuff. All right, long-term trend is actually good. Trend line is rising. Money flows, it's a little sideways. I'd like to see a little more out of that, but it's not bad, right? Positivity, right? This looks all right. Things are going okay. So that's first things first. Next, we do have our shorter term going negative. It went negative last week. Might have been earlier this week, but it's not hugely negative. So we're not fully in the protect mode, but we're in a heads up, caution. I want to think about things could get a little shaky for a little bit, but I think through this year, based on seasonality, based on a lot of things on the presidential cycle, this is usually another positive year for the market, although not as good as the previous year. That is typically the third year is the best year of the cycle. This is also a good year, but just not as good. So if we're lucky, maybe we'll end up with an 8 or 10% on the indexes by the end of the year. Who knows? The election could throw that way off because things can get crazy, but we'll see when we get there. But for now, it's slight caution. It's not bad. This was something worth being concerned about, but not much happened. Unlike back here, where when these were low, that was a big sell-off. So definitely a different environment right now. The market is very resilient to any kind of negative news for the moment. Interesting is last month these changed. Last month S&P was stronger than Nasdaq, and we've gone back to Nasdaq. And as I've said, if the Nasdaq is leading S&P, that's usually the sign of a good market. It's fairly strong. Large over small, there are different reasons why that might be good or bad, but I kind of like that. It matches with the Nasdaq theme that the tech is running things, that large cap growth is really where it's at. So, they stick with that. Nasdaq also beating small cap, and then we're back to growth over value. Last month, value was leading, and now we have switched back to growth. That's a positive sign for the market. As also, I don't usually talk about these, but these are the leveraged S&P versus the straight S&P non-leveraged. And if the strength of those is more, that means the market is moving up fairly strong. So I can think about, do we want to be aggressive in this point, or at least risk on as much as possible? And those both say yes. And they have for several months, really since November, since we had that bottom in October. So interesting to watch those. Sectors, a little mixed. I'd like this to be better, but it's not. But at least we have some of the defenses over here. Utilities, negative for 3 days. Materials are over here, negative for 3 days. Nothing really concerned. I know there's a lot of talk about real estate and commercial real estate having a problem, but, and that's not, to be expected. The real estate is a weak sector of the market. But XLC, that's communications, that's the Facebooks, the Googles, they're doing just fine from what I can see. Industrials, seasonally, it's a good time for industrials. We've been looking at those, but with what happens in mid-February, we're not diving into anything too aggressively at this point. Technology is, of course, doing fine. Kind of odd, the consumer staples are beating discretionary. For some reason, they've been stronger, and that's actually not a positive, but hey, they're both happy. They've both been running, and there's no complaint about that. So no real negatives there. The rotation, everything is up in the improving and leading. Technology is pushing down to weakening, although I think today the Nasdaq is flat as of right now. But this is still pretty good. This looks like we could have another week, maybe two of the market grinding along okay, maybe sideways, maybe up a little bit, but nothing hugely negative. But once these all start pushing down into this weakening box, you want to be careful. And I post these every week on Twitter if you follow me there, so you can see where we are in the rotation, because I think it's really worth paying attention to that, kind of understanding where we are as things rotate through the cycles. And this is one that I shared on the stock charts yesterday. And this is the McClellan oscillator. And typically, when the number is below zero, the zero line here, that is a negative breadth for the market, right? There's more money coming out than coming in theory, although the markets just seem to go sideways right now. Typically, when we have these, we broke down here, this should have been a little bit sideways to down, but we had a good run through November. And now February, we have a little bit negative on the breadth, but it's still just kind of holding up. I am concerned because of the rotation that in some time, maybe it's a week from now, maybe two, that we do start to see a bit of a sell off or a pullback. At the moment, I don't think it's going to be very big. I think we're going to be okay for a little while. I'll leave it to Will to burst that bubble later on his presentation, but there's definitely a divergence, right? So, because usually when this money flow goes positive, you have a great run up in here and then a weakness. Same here, the weakness, and then strength. It usually matches with what the market's doing. And when we have a mismatch, it's just an interesting oddity that you need to pay attention to, because the bias is still going to be negative. So at some point, there could be a little bit of again, the pullback that I'm seeing, again, I don't think it's going to be a very big pullback. And then the other one is the bullish percent index on the S&P. Now, this one kind of blew my mind is because every time this peaks up here around 80, it was a little less than here, less there, but it corresponded with market tops over the past 2 years. And this one, it did a little bit and then it just kept going. But the breadth kept coming down. So I don't love that this is below 70. It's another reason to give pause. It could be, we could get mid-month when everything slows down. This could pull way back into hopefully down into the 30 range. And that would be an excellent time to buy into March, April, May. It's seasonally a good time. So the seasonality factors are all really lining up for this to make sense. If we have a week next couple of weeks, well, maybe we have another good week, and then we have a week month through mid-March, and then we could have a really good run through seasonal run through from there. And then finally, I did this last month, and it's the seasonal trend of the S&P over the past 25 election years specifically. So this goes back 96 years to 1928, and the average election year, and how the S&P acted. And typically, it just kind of grinds along until May. There is usually a little bit of a sell-off in May, and then from there, you don't sell in May and go away. You actually want to buy, and it's good through September. Very different from most other years. That's not the case. Frequently, July, August can be good. Well, August usually is the peak, and then things go down from there. But it's a different situation this year. And then you get a good run after the election or into it through. But the bulk of the expected move is going to be over the summer, June, July, August. So we're keeping that in mind. It's the opposite of sell in May and go away. But that's where we are. So I think that's positive. I think we're going to have a good time through the end of this year. And then after that, it's really hard to say. There are a lot of wild cards, a lot of crazy things that could happen that could really derail the market. So we'll have to see what happens.